Hey everyone, welcome back to another episode of AWM Insights. We're going to talk a couple market events today, and really, as we do, bring our perspective, bring them back to some of the core pillars that we subscribe to, and hopefully, gives people some peace of mind and context on how we're interpreting current events, thinking about the markets both in the short term and obviously in the long term. So without further ado, I'm going to jump right into it. Equity markets have rallied quite a bit. S&P 500, NASDAQ, and the Dow all posted pretty strong gains for the first week of June. And the S&P now is above 6,000 for the first time since February 2025. So pretty strong rally since Liberation Day. And I think it's fair to say, in general, the market is seeing a lot more positive momentum, both from a volatility perspective. There's something called VIX. That's way down. That's a measurement of volatility. And a lot of this is due to positive economic or more positive economic news than what is expected. So jobs data is slightly more positive than what was expected. And if you think about how the market works, right, we always talk about, hey, it's reflecting information, it's digesting information and instantaneously reflecting that in prices. And so if expectations are if reality rather is slightly better than expectations, you're going to see some adjustment and a positive adjustment at that. And so that's kind of what we're seeing, right? There's positive economic data. The earlier recession fears are diminished quite a bit. I wouldn't say they've gone away completely. There's still some uncertainty, but there's probably a lot less uncertainty than there was, April. So we're seeing that in actual data, and I think we're hearing about that in just general anecdotal news around, say, U.S.-China trade developments, and just general messaging from the powers that be. So all in all, I think we're in a let's call it more risk-on type environment, Mena, and you're seeing that across the board, right? U.S. equities are doing well. Equities outside of the U.S. are still doing well and actually have continued to have a stronger year so far relative to the U.S. equities. And then crypto, or Bitcoin specifically, crypto at large is kind of a mixed bag. I mean, Bitcoin is definitely the breakout performer there, and we're going to talk about that. Again, we're going to help digest what's going on, give you guys all the framework and some talking points, some questions we might even have at that around current market events. So, I mean, I'll turn it over to you. Kind of gave you a good setup there. How do we run with current market environments, current events in the world right now?
Yeah, and the last 2 months have been, we've highlighted this before, but there's been a lot of noise and there's been a lot of fear. We saw that in early April. We're sort of shifting out of this fear cycle into a greed cycle. And it's important to not let these cycles and just the general market impact you. Obviously, it's emotional. It's emotional to see markets go down 20%. It's emotional to see them, rally another 20% in a couple weeks, couple months. But it's that concept of being disciplined, remaining disciplined. Just realize that everything that's happening that you're seeing is one point in time, and 20 years from now, your portfolio is really going to be compromised, and it's going to be a testament to what you did at each crazy point in time that you've experienced over 20 years. And I will make just the point that your scorecard, your report card is not going to look too hot if you react to every single event that happens.
Oh yeah, 100%. And we can always go to these one-off anecdotes, and I'm going to do it because I've got two really good ones actually. So, I talked to all sorts of different investors, and in the last 6 months, there's two conversations that really stand out in kind of both sides of this coin. There is one individual who has been investing for his entire career, more so in the world of venture capital. But when I caught up with him last, he made the comment that, oh, hey, I reduced my public equity portfolio leading up basically right around the inauguration because of the uncertainty in the messaging. I sold out of public equities. And when I had that conversation with him, this was April-ish, he looked brilliant. Fast forward to today. Now I am speculating myself, but I'm using it as a great example. Fast forward to today, I would be willing to bet that he has not reallocated to public equities and has missed out on this big rally, right? And so like you can look brilliant in the moment, but guess what? In this specific example, you have to be right twice, and it's super hard because it's really, really emotional. To your point, Mena. The flip side of this is, I was talking to someone more recently who's like, oh, investing is super easy. I bought some Amazon stock at the bottom and, look at me, I look brilliant, right? And so is that skill or is that luck? The data shows that is pretty much luck, attributed to luck. Now, good for them, that's great. And then what are they gonna do the next time that position craters? Because it will happen, right? We know it will. The market craters maybe is a strong word, but the market goes up and down. We are in a period, to your point, of risk on, of kind of greed, fear versus greed. And this happens, but discipline is going to drive long-term success, which I think is what you're getting at.
Yeah, and we really believe in outcomes. Obviously, you need your inputs to be right, but we believe in outcomes. That example of buying Apple at the bottom, great entry point. What does that actually look like 20 years from now? We don't know. And history actually shows us that not being diversified, making individual stock bets probably is going to lead to a loss or just an impairment of value over extended periods of time compared to actually having a diversified portfolio. It's sort of like, if you're releasing a football field onto the field, you're obviously paying everyone. You're also paying for their equipment. You're not going to just invest all your money into your players' salaries and send them out without, helmets and pads. If you if you try starting a quarterback without a helmet, that's probably not going to go too well. You'll probably have an Aaron Rodgers situation there where the player plays for 4 downs and that's absolutely it. So it's about creating a team, a well-structured team that can perform across an entire season and really give your portfolio all it needs to be successful over the long term and not just, get lucky on one Hail Mary or one play where a lack of discipline leads to a good outcome in the short term, but isn't setting you up for the future.
That's right. Another analogy I'll throw out there is I talked about discipline, right? And the opposite of discipline is this analogy around chasing your tail, right? Think about a rat, a hamster, whatever it is, where they're just constantly chasing something that is unattainable, right? And so like that's this visual representation of speculation. We used good old AI to say, hey, what is speculative investing? It says high risk, high reward bets driven by emotion, trends, or FOMO. Terrible ways to drive long-term success. Those are terrible ways to perform at whatever task you're trying to perform at, whether you're a baseball player, football player, golfer, founder, president, CEO, etc. We know the path to performance is anything but speculation and constantly changing things. It all rests within discipline. So how do we take that, Mena, and think about crypto, Bitcoin specifically?
There's a lot of different views. So from an allocation view and from just maybe let's just call it a high risk, high reward standpoint, you really shouldn't be betting with that much house money if you're speculating. Like the concept of speculating and betting, I'll just throw it out there. It's sort of like your Prize Picks portfolio. You're probably not putting, a car payment, your rent, a potential future house down payment on Kyler Murray throwing for 300 yards because you never know what's going to happen. Right. And that's totally out of your control and the odds are stacked against you. The way you should actually look at these, speculative investments is there needs to be an understanding that there's a ton of volatility. There's, in some cases, a lack of regulation, and you are swinging for a grand slam if it happens. That is very rare. And if you're not doing that, if you're doing that with too much equity, too much of your own assets, you're just setting yourself up for potential failure. So it's understanding really what you're investing in, right sizing it, and not really hoping, not using hope as an investment strategy. Hope is not an investment strategy, you know. Hope, I hope a lot of things go well, doesn't mean they will. It's about putting your best foot forward and actually having a plan that has a high likelihood and high level of confidence of working.
Yeah, 100%. And with respect to crypto and Bitcoin specifically, I mean, everything you said applies. We've talked a lot about that in years past. Maybe we can surface those conversations again, but just to kind of give folks a summary of kind of how we view the world. And I think we've even said this in a recent podcast where blockchain specifically, which Bitcoin is a product of, right? Blockchain is this underlying technology, is incredibly fascinating. We are allocated to that in technologies and companies that are using that in very interesting ways. We are allocated to that within the private markets, venture capital kind of specifically. And it's kind of this picks and shovels approach. That's a very interesting tool that is getting more attention today. It went through a period, 3-4 years ago, where it was getting a lot of attention and a lot of speculation as well. And so even though it's back kind of in the speculative category today, there's still some interesting underlying ideas and concepts around blockchain, which is the core technology here. And we think that's fascinating. We take this more picks and shovels type approach from an allocation perspective. If you want to understand that more, definitely reach out. But then Bitcoin specifically, I think we have talked about this recently as well. The play right now, at least from our perspective, is like a digital gold. And that's great. Gold is a speculative asset class, or an asset rather, and figuring out how to actually value that. Is it just a supply and demand dynamic, right? We generally steer clear of investing in asset classes like that because of a lot of what we've talked about today, right? The probability, the return drivers, and understanding truly what's there puts folks' investment portfolio and plan a little bit at risk. We'd rather take the risk in a similar vein in this picks and shovels approach, early stage investing, where people are using that technology to create outright value. There's no inherent value in gold. I mean, very minor value. And there's no inherent value in Bitcoin quite yet, right? It is truly more the speculatively driven asset class, at least as it stands today. And so that's how we think about those two in particular. And hopefully that helps everyone. Hopefully this conversation was helpful. A lot around speculation, but certainly probably worthwhile when it comes to the current market environment. I don't want to say the current market environment is rife with speculation. There's pockets of it that are driving the conversation, certainly, but we want everyone to know how we think about it. Here's a great quote we came up with: "Speculation is a weekend hobby. Investing is a career." Right, and so we really take that comment to heart when we're building portfolios for everyone. So, with that, we'll wrap there. Definitely reach out if you have any more questions, whether it be generally in how we craft portfolios or around current events, or if you want us to go more in detail around crypto and Bitcoin, we're happy to do that. And until next time, own your wealth, make an impact, and always be a pro. Thanks for listening.